Hey guys, today is Saturday the 9th of July, and just a couple of things. So I've just put on a bit of a screensaver thing on YouTube, um, just really for your own entertainment, nothing to really pay attention to. I'm just putting it on so you can have something to watch really, so yeah. And the second thing is, one of my mates asked me if I can just do a kind of a short video to explain the impact or what the ramifications are, for Australia's potential or already credit downgrade. Okay, so now I'm not expecting all this, and you're going to be able to find a lot more information on the web. There's more people out there that know more about the details than I do, but I'll kind of give you like a gist of it and kind of dumb it down as best I can, and kind of add in a couple of other things too that you probably won't hear much in the media, right? So firstly, the credit. Okay, so think of it as your own credit score, right? So your individual credit score, like the higher your credit score is, the more borrowing power you have, right? And the lower it is, the less borrowing power you have. And even if you do manage to find a lender, then likely they're going to jack up interest rates, right? So that's the main gist of it, right? And that's your credit score is basically dictated by whether you pay your bills on time, how much debt you have, how many requests you've made for loans that have been rejected, things like that, right? So they all add up to your credit score, and that's no different to say a government or institution, right? It's the same thing applies, right? So that's the first thing, right? So there's a few of the big ratings agencies. So you've probably heard of Moody's, S&P. Those are the big ones. And the difference there is, rather than assigning like a point system, kind of like what you'll probably see in your credit score, like 600 or 800 points out of 1,000 or whatever it is, they assign like a AAA or triple B or AAA minus or whatever the case may be. So that's how it's assigned there, right? So same thing applies. If the credit score if the Australia or any other country gets downgraded, then that affects their purchasing of their borrowing power and all that, right? So the question is, how does this affect like the everyday person or the small business owner, right? So there's a couple of things you kind of need to know, right? So personally, I don't take these guys too seriously. Like I do pay attention to it, but I don't, go with whatever reason they come out with, right? And that's mainly because of what happened in the GFC, right? So during the GFC, you had these big ratings agencies that were kind of competing against other ratings agencies, right? So what I mean by that is, imagine you're a bank or something and you go to one agency and they give you a rating of triple B, right? They publish that as well, so other lenders know, right? But then that same bank goes to a different a different ratings agency, and they get AAA. So what do you think is going to happen the next time, right? They're always going to go to the one that's going to give them the best rating, right? And that's pretty much how it was during the GFC. So, and these guys are competing against other ones, so they're not going to risk their business to, when the other one's giving a good rating. So the bank's always going to go to the best one. And that leads on to all this sort of dodginess going on under the table deals and all that kind of stuff. So, and it got to the point where pretty much anything that was bad was rated AAA, right? And what I mean by that is, say for example, mortgages, right? You've got your very low risk kind of mortgages where most of the mortgages are kind of like from people that can afford to pay their mortgage every month or whatever. They're considered to be low risk, and they were given a high rating, which is fine, right? AAA. But then you've got your subprime kind of loans, where it's like these people had no assets, no income, no job, but they were still given AAA, right? So, and these investment products were sold to, say, other investors as being AAA, when really they were like triple C or something like that, right? So that's the main gist of it. So that's the first thing. And I won't get into details about it, but you can Google and research it yourself. So yeah. So I have no credibility. They don't really hold any credibility to me, and I don't really, trust whatever they do, right? So how does this affect business owners and everyday people, right? So And see, the thing is, most people will kind of look at this in the sense that, so how does this affect me, right? Because naturally people are kind of selfish that way, like they'll think about themselves. And I'm not saying that in like a negative tone. I'm more like saying, that's understandable, right? Because first thing you want to know is, how does this affect you, right? Before you think of other people, right? But that's just how naturally most people think. But the bigger picture of it is where, see, it could mean the credit downgrade could be a minimal impact, or it could be a massive impact, right? And to understand the massive impact, you need to kind of look at it from a bigger picture perspective, right? And how that kind of filters down, right? So let's just say, for example, Australia's credit rating got downgraded from AAA to triple B, right? Just an example, right? So that means that, the borrowing power is a lot less. They're likely going to be paying more interest if they're going to borrow money, right? And the government, and this happens all the time, it's not like nothing unusual, but the government always borrows money from whoever, right? They borrow money to fund their government programs, their education programs, social security, even to pay bills or pay debt, right? Happens all the time. So that's what happens there. But in the event that they're unable to borrow or borrow as much as they want, right, they're going to have to make up for that by other means, right? They're going to have to get the capital via other means, which it could be raising taxes, or like cutting certain programs, cutting certain tax incentives for individuals or businesses, things like that. Like, you hear it all the time. So that's that there. So that's always going to have an impact to businesses and so forth, right? So a business that might be, might be getting some tax incentives, for whatever reason, they might have that cut. So that's going to affect, how they do business moving forward, right? That's at a high level, right? So, but the other aspect of it is, it also affects how small businesses can borrow as well, right? Because, we're talking about the entire country, right? So I'll just use an example of this, right? So let's just say, say you're a cafe owner, right? And you have a small business, and you have 5 staff, 5 casual staff, whatever, right? And every now and then you get a loan from the bank, and that's to help cover, payroll or, some upgrades or some purchasing new equipment, all that kind of stuff. And say you've had no problems in the past, but say the next couple of months you're planning to get a loan to cover most of your staff payroll, right? But also you want to get additional loan on top to buy new furniture, or do a refurbishment or refit of your cafe, So that's your plan, right? And let's just say that what you have in the bank right now, like the amount of cash you have in the bank right now will only cover one or the other. Actually, will cover both, but one will have to suffer a little bit. Okay, so let's just say if it doesn't go ahead, then you will have to kind of make a decision whether it's to cut the refurbishment works altogether or delay it, or you're going to have to potentially cut 1 or 2 of your employees, right? Which is in order to cover some payroll and then cover the refurb works, right? So that's kind of a business decision, okay? And let's just say, okay, so you finally get a bank and the bank rejects your loan, right? Doesn't approve it, doesn't go ahead. So therefore now you're kind of stuck with what you have, right? So you're going to have to make a decision. So what do you do, right? So there's 2 things you can do. Either you go ahead with the refurb works, right? And then you're going to have to cut 1 or 2 of your employees in order to be able to make payroll for the next few months for your other staff, right? So that obviously hurts the employee. They're going to have to go find a job or whatever the case may be, right? The other option is you delay the refurb works or purchasing of furniture and equipment altogether, at least for a couple of months or even permanently, right? Thereby, you've got more than enough capital to make payroll, right, and keep your staff so they remain employed and everyone's happy, right? So either decision, there's going to be like a pro and a con, right? So just understand that when if you're completely putting a halt to your refurb works, right? That is, and let's just say the total estimated cost was about 10 grand. That 10 grand is potentially, lost, right? So the business or the contractor or the laborer or whoever would have benefited from that business, part of the business, would have lost that business, right? So that means that it affects, say, the laborers, electricians maybe, carpenters, the people who supply the furniture, so the manufacturers, even the people who deliver it, like truck drivers or couriers or whatever the case may be, right? So that affects them, right? So therefore, that's a piece of business they lost, right? Now, so that obviously has an impact on their business. Now, imagine if you have like about 100 or 1,000 small businesses like that have to make the same decision. That means that part of the economy, the ones that are responsible for, like, that do most of these kind of upgrades, suffers to some extent, right? I don't know how much, right? So that's the effect there. That's how it works, right? So that's looking at a very small scale. So that's what I mean by you're going to look at this from a bigger perspective and how it affects the overall economy. So the next thing also is what they call money velocity, right? So I might have to kind of bring up my notepad thing and I'll show you what I mean, right? So hold on a second, I'm just going to pause this. So this thing's called money velocity, right? If you've heard of it before, right? Now, what happens is, say for example, you're an employee at the cafe, and when you leave, you get your pay or your tips or whatever it is, and just say you get $10, right? Right. So what happens next? When you leave the cafe, right? You might spend that $10 to, say you catch a cab, right? And the cab fare costs $5, right? So you spend $5 on the cab, right? And then what happens is that cab driver with the $5, he will eventually spend it on something, whether it's petrol or buying smokes or whatever it is. He spends like $5, right? So cab driver spends $5 on smokes or something, right? And then that money goes into the till, right? And goes to that petrol station, whatever it is. And they eventually use that money to pay part of it or all of it to staff, right? To pay staff or whatever, right? And then that staff member then takes that $5 that he's just made for the day or whatever it is, and then he goes and spends it on, say, groceries, right? And then it trickles through like that. So groceries, and then they might spend, the supermarket might use that money to spend it on buying more stock or something, stock. And then it just goes through like, so that $5 that from that original cafe owner is just moving through the economy as so, right? It's just filtering through, and therefore you get, constantly, the economy is constantly moving, right? It's not stalling, it's just constantly moving, right? So that's the first thing, right? But do another new page, right? So that's how the economy works. It's just, everything's flowing through nicely like that. People are making money and they're spending, and everyone's all happy, right? So that's good. Now, it becomes a problem when you've got, say, that same person that had that $10, what they do is instead they decide not to catch a cab, right? They decide that they're going to walk home. It's going to take them, if they caught a cab, it would take them 2 minutes, but if they decided to walk, it would take them 15 minutes. And, times are a bit tough, and, they want to cut their spending or reduce their spending and kind of save more, right? So what happens is they decide to walk home, and that $10 instead might be going straight into a bank, right? They might deposit it straight away, or they might, stick it under the mattress, right? Or whatever, like piggy bank, right? So what happens there? So the velocity of that $10 becomes, say for example, V minus, whatever, V minus X, right? It's not doing anything. It's just sitting there, not being productive. It's not being utilized in the economy to grow an economy, right? And again, you got to think of it as big picture. This is just one small example, right? This is like, you got to think of it like at a grander scale, right? So as of right now, that $10 is doing nothing. Basically, in this sense, the economy is stalled, right? Because people are saving. Now imagine if everyone else, each week they're getting paid, and then instead of using that money to spend on groceries or going out to a restaurant or watching a movie, they're just keeping it, they're holding it, they're hoarding it, right? So you get this kind of almost deflation where nothing's happening. So hopefully that kind of explains to you money velocity, how that moves through the economy. So how does that come back to, how does this downgrade affect the economy, right? So when people are kind of like finding it hard to borrow, or, whether they're borrowing or not, like if they decide to, cut expenses or reduce spending or whatever the case may be, that has an effect on the speed of the economy or how fast the economy is going to grow, right? So if you're looking at it from a big picture, that's how it's going to affect it. But that relies on just everyday people. Like some people might not even take much notice of this at all, and they might just keep spending and spending and spending. This is the main reason why they've been lowering interest rates for so long, because that encourages people to borrow more, and interest rates are less, so people don't have to worry about making 10% interest payments on top of each month. And the whole point is to stimulate the economy, right? So people can borrow and spend stuff. But the problem is it's not working out the way that they expect, right? So a downgrade on the Australian economy will limit borrowing. Because of interest rates being higher and stuff like that, and the government's going to want to kind of find other ways to make more money, right? And that is through raising taxes and all sorts of different things, right? And so that's how it happens, right? So that's how the impact of the overall economy. It just it can create a slowdown, but like I said, these it just depends on the general population, what the sentiment is. If people think everything is fine, then people just keep spending. But once people realise that things are not so great, right? Or in other words, if confidence is less, then they're going to obviously by nature just going to be reducing their spending, right? Or be more conservative. And that's what's going to happen. That's what slows everything down. So that's the big impact. So that's what I mean by when I said it could either be a massive thing or it could be something that you probably won't even notice at all, right? And if that continues, then obviously you're going to see within a year or longer, you're going to see the effects of that, right? So, and when these things happen, you don't see the result straight away. It's not like in a month's time you'll know if there was an effect, right? These things take like months or maybe years before it actually filters down into the economy, and then it starts affecting people. And even then, it still takes people at least a few months to actually feel the pain, right? Or not, right? So, and by that time, that's when they have the data. So every time they release data, it's usually lagged. It's at least a few months or whatever it is. So that's the impact there. So I hope I explained it kind of in a reasonable way for you. I think that's a pretty good way of looking at it. And the other thing that this credit downgrade thing, it's the other thing I don't take it. The other reason why I don't take it too seriously is because technically they should have done this years and years ago, right? Because the world has exceeded its debt way years and years ago. Now it's at the point where it's about to collapse, right? So you're probably hearing more on the news about big banks, they're actually telling customers, right, to don't buy stock, or sell stock now. They're trying to tell you, there might be a collapse soon or whatever it is. So we're doing the right thing by our customers by telling them that they shouldn't buy stock, but they should be more careful, right? So that's a good thing, right? But when you think about it, that should have been told ages ago, right? It should have been, why they're telling you now, right? And part of all this is, and you're probably hearing more people in the media start to come out, especially the property people, property people that were pro property saying no, property's fine. It's it's always going to go up and stuff. Now you're starting to hear them come out and say, oh yeah, we might have a bubble. We might have a correction, right? We might have a 10% correction or something like that. And when they say 10% correction, usually it means 20, right, or 30, right? But they're starting to come out now, kind of warning you as well, right? And this is all to cover asses, right? This is all to cover their ass, right? Because they know that when this does break down, they can kind of say, well, I did tell you, we warned you. We warned you that, we might see a correction, right? But they should have told you that like months and years earlier. It's not pretty much on the verge where, people have to make a decision straight away, right? Because property, stocks and property, this is why I prefer stocks and trading and like currency trading and all that stuff as a way to earn income rather than property, right? Because it's liquid, right? So I can get rid of my stocks. I can own and get rid of my stocks at a one click away. It's one click away, right? So if the stock market goes down, like I can quickly just click and sell it, right? Even if it's a loss or profit, doesn't really matter. I can click and then close it, and therefore I'm out of the position, right? Whereas property, it's different because like you can't just sell it straight away, right? You kind of have to go through this whole process, put it on the market, get an auction, and then find buyers. And it could take days or weeks before it gets settled. Whereas with me or stocks, it gets settled within like a minute or less, right, or second. Whereas people that sell the property, like who knows when they can sell it, right? It's not liquid like that, right? So that's just something I added on top. But so like again, so just to sum it up, it just depends how you look at it, right? If you're looking at it from just strictly individual, then you're not, depending on what your personal circumstances are, like it might have a big effect or might have a minor effect. But if you're looking at it from an overall economic perspective, which will eventually affect you, then yeah, there could be some ramifications from it. And if the government's unable to borrow as much as they'd like, or they're finding that they can borrow, but the interest rate payments are going to be higher, then they're going to have to find another way to compensate that, and that's going to be through taxes or more laws, right? Or more fees on top of what other services they provide. And it could be taxes, individual tax increases, or it could be business tax increases, right? And either way is not good, because if you increase taxes, this is why people always say tax the rich, but you gotta understand that those are the people, the rich are the ones giving you the job, right? So if they're finding they have to pay more tax every year, they're going to take their business overseas or somewhere else where the tax is a lot cheaper, right? Or a lot less. So, the rich might be getting richer and stuff, but at the end of the day, they're giving you a job, right? So you can either just, deal with that, or you can deal with the fact that you might lose your job. It might be moved to China or India or something like that, and you'll lose your job. So, so that's the thing there. And one more important thing, last one is, so whatever decision comes out, so if lending becomes tighter, right, and it affects small businesses, ability to borrow money, right, then that's going to rely on, you need government. This is where government's really important, because they need to somehow not enforce, but they have to make amendments to current policies or add in new policies to kind of like help alleviate some of the pain for some people or some businesses. Like some businesses might get hurt really bad from one decision, right? So in order to keep them happy, in order to keep the economy or keep businesses running, government will have to do something, whether it's through tax incentives or like subsidies or all those kind of things, to kind of take a little bit of the pain away. Like they're going to have to deal with some pain, right? But they're going to have to supplement that and make things slightly easier. So again, but it's when you get into the details of it, there's a lot of things going on. So yeah, and as you know, my view on government is like, these guys, they're pretty much useless. So, and they're going to think about themselves first, right? So They'll pretend to act in the best interest of you or businesses, but really it's them first. So that's why I'm kind of might have some cause for concern, because if these guys aren't doing their job and kind of help protecting businesses and individuals from things like this, then that's where things might begin to crumble or fall apart or get worse. So, and that, I'm just giving you an example of that. Just another way of thinking, really. I'm not saying anything I said was correct. I'm just saying that's the thinking. That's how I think of it. So hopefully that helps. But yeah, not too much to really be concerned about now. I think it's going to be just keep an eye on it, but it's something that takes a while to unfold. So yeah. So I hope that helps, and all the best. Cheers.